This is the Trump meme coin. At its peak in January 2025, it was worth roughly $75 a token and carried a market cap of around $15 billion. Today, it trades for under $3, having wiped out close to $4.3 billion from an estimated 2 million retail investors. And not a single person involved in launching it has faced so much as a fine. The man who launched it is the sitting president of the United States. The 800 million tokens reserved at launch, 80% of total supply, went to two Trump-affiliated entities, CIC Digital and Fight LLC. The Trump family generated over $320 million in trading fees alone, and by some estimates, over $1 billion in total crypto income across 2025. For every dollar insiders earned from the token's ecosystem in trading fees, retail investors lost more than $10. This is, quite simply, a wealth transfer. And it is one piece of a much larger pattern that has made a basic question feel reasonable to ask out loud. Why does the world feel like a scam? Strictly speaking, the United States has rules against this sort of thing. Rule 10, B5 of the Securities Exchange Act of 1934 prohibits trading on material, non-public information with penalties running up to 25 years in federal prison. The Stock Act of 2012 explicitly extended those duties to members of Congress. On paper, this is a serious legal architecture. In practice, the maximum penalty for a member of Congress caught violating the Stock Act's disclosure rules is a $200 fine. In 2025, members of Congress and their families executed approximately 13,300 trades worth $635.6 million. Dozens of them were found in violation of disclosure requirements, a recurring pattern that ethics watchdogs have documented year after year. Criminal prosecutions since the law's passage, 0. Now, consider what the policy environment around those trades has looked like. On April 9, 2025, Trump announced a 90-day pause on his sweeping global tariffs. The S&P 500 jumped 9.5%, one of the largest single-day gains since the Second World War. Roughly 18 minutes before that announcement, traders placed enormous bets that the market was about to surge, with no public information to justify the timing. In the days leading up to it, 3 senior administration officials sold up to $10 million of Trump media stock. Senator Markwayne Mullins sold between $290,000 and $700,000 in stocks the day before. It happened again with oil. On March 9th, 2026, a massive surge in short oil positions appeared 47 minutes before Trump told CBS News the Iran conflict was pretty much over. 2 weeks later, a roughly $500 million bet on crude futures was placed 1 minute before he announced a delay in plans to strike Iranian energy assets. Traders have given this pattern a nickname. They call it the taco trade. Trump always chickens out. And then there are the prediction markets. PolyMarket and Kalshi have seen explosive growth. PolyMarket alone was valued at $9 billion by early 2026, letting users bet real money on elections, military strikes, and government decisions. Donald Trump Jr. sits on the advisory board of one and acts as a strategic advisor to the other. In April 2026, the Justice Department brought the first-ever criminal insider trading case involving a prediction market, not against a politician, but against an Army Master Sergeant who used classified intelligence about the capture of Nicolas Maduro to turn $33,000 into roughly $436,000 on PolyMarket. A separate trader, still unidentified, has reportedly hit a 93% win rate on wagers tied to unannounced U.S. and Israeli military operations. No charges. In any functioning regulatory environment, a list like this would trigger a cascade of investigations. Instead, the watchdogs are being defanged in parallel. The SEC's fiscal year 2025 saw the lowest number of enforcement actions in at least 20 years, 456 in total, with nearly half inherited from the prior administration. Its enforcement division lost 18% of its staff. The CFTC has shrunk by 24% since January 2025. The Justice Department's Public Integrity Section, the unit that prosecutes government corruption, has been reduced from roughly 40 prosecutors to a handful. Crypto enforcement actions against Coinbase, Kraken, and Binance have been quietly dropped after firms in the industry contributed at least $85 million to Trump-aligned political efforts. And in March 2026, the SEC's enforcement chief resigned after 6 months on the job, reportedly over clashes about cases involving people people linked to the Trump family. The result is not lawlessness, exactly. The laws are still there. They are simply being enforced selectively against the smallest fish in the pond, while the largest operate in the open. Trump's personal net worth has reportedly grown from around $2.3 billion to $6.5 billion since returning to the White House, roughly tripling while he sets policy that directly moves the assets he holds. 86% of Americans across both parties support a total ban on congressional stock trading. The Stop Trump in Crypto Act stalled. The Restore Trust in Congress Act stalled. The president himself, at a 2026 press appearance, lamented that the whole world unfortunately has become somewhat of a casino. He said this having launched a meme coin, co-founded a DeFi project, and raised his son into the advisory boards of the two largest prediction markets on Earth. The world does still have rules. There are simply two sets of them now, and the institutions built to enforce a single set have been dismantled by the people they were designed to police. What's left is a country where the question is no longer whether the game is rigged, but how long the people losing keep agreeing to play.